Welcome to another episode of Ozone Global Voices. I'm Hugh Davies, the co-founder and CEO at Ozone. And I'm really delighted to be joined by Bill Roberts today. Bill, I know you have a really interesting and colourful history in the space of open banking and open finance globally. So perhaps you could do a quick introduction and then we can jump into some questions.
Sure. Thanks, you, and thank you for inviting me on today. So what's my background? I used to run Which magazine, which was about publishing information, and I moved to Thomson Reuters, which was again about publishing information. And then at the CMA, which was where I was for quite a while, I was the head of open banking, and I led the team which designed and implemented basically the first open banking ecosystem in the world. Since then, I left the CMA. I'm now a fellow at Cambridge with the Cambridge Centre for Alternative Finance, and I'm also an advisor to the Bank of Thailand on open finance, and they're very interesting Your Data project. But most of my time at the moment is spent on the course that we run at Cambridge for regulators on online banking, online finance. The next cohort of which kicks off in September. So that's me.
Fantastic, thanks, Bill. And of course, we first met when you were leading open banking at the Competition and Markets Authority, and myself and Chris and Freddie and a number of the Ozone API team were part of the team that designed and built open banking in the UK for you and for the industry. So it's great to be back here talking. Really interested to hear a little bit more about the course you're running, the Cambridge Institute. Maybe tell us a little bit more about it. I guess the role that you're playing in trying to help drive the development of open finance around the world.
Okay. Well, first of all, it's to mention that the audience, if you want, or the market for the course has got larger and larger and larger. When we launched open banking in the UK, there were maybe 2-3 other people kind of doing it or thinking about doing it. And in the survey we published at the end of last year, there are now 95 countries either implementing or either having implemented, in the process of implementation, or seriously contemplating it. So that's getting on for 100 countries around the world now. And very often the regulatory authorities in those countries lack capacity, knowledge, or expertise in how to do it. So basically what the course does is to try and fill that gap. And the benefit is to help people stop making or avoid expensive mistakes. And to do that, we bring together regulators who've already implemented. We technical advisors, people who can talk on the technical side of things, people who are providing services, and even banks we persuade to talk to us and talk to our participants about how to and how not to implement open banking and open finance. If there's a theme, it's that there's no one right way of doing it. There are plenty of wrong ways, but there's no one right way of doing it, and what you need to do will depend on what your policy objectives are and what your local circumstances are. So it's a kind of +1 approach. You build on the foundations you've got, whether it's digital ID or an existing account-to-account payment system. So no one right answer, plenty of wrong ones. What you need to do depends on what the problem is you're trying to fix and your starting point.
Yeah, it's really interesting. And we've sort of been on a similar journey, sort of looking at supporting both regulators and banks as open banking and open finance is rolling out around the world. Often have the same conversation. There isn't a single right answer. Depends a lot on circumstance and situation within each market, but there are a lot of mistakes that you can avoid, and there are some key foundations that need to be right. And I'd love to delve into that a little bit more in a moment. But one of the things we were chatting about before as well was, where's this coming from? And almost you were saying your course kind of acts like a leading indicator in terms of where's next. And yeah, I'd love to just get a bit of a view from you in terms of actually what's the audience look like? How's that changed over time? Where do you think the the interesting areas that are coming up, maybe?
I think you see it in kind of waves. I mean, going right back, the pioneers, if you want, the people who started doing this, they kind of looked a little bit like the UK. So Australia was an obvious case. So you tended to be looking at typically common law countries, Commonwealth countries, relatively well developed. Put India to one side, but then things started to change, and you notice that it was, emerging economies, developing countries starting to adopt or talk about open banking, often for reasons different to what they were looking at in countries like the UK, which is principally about competition. Instead, they were seeing benefits in terms of financial inclusion, for which in some cases you could interpret as getting rid of the grey economy and bringing more people into the tax net. But yeah, so I guess the first wave was Southeast Asia. Started seeing quite a lot of adoption there. Then, from our point of view, the focus turned more to Latin America. Maybe 18 months ago, it was Latin America, and now we're seeing a lot of people, a lot of regulators in sub-Saharan Africa, sending people on the course too, and as well as you'll know a lot about. The Middle East and North Africa, the MENA countries, are motoring in some very, very interesting ways at the moment. So I don't know, but where to guess next? I think you might see quite a lot of activity in Africa over the next 12 months, 18 months.
Yeah, I'd echo that. We're certainly seeing a lot more interest in sub-Saharan Africa as markets are starting to look at how do they really take advantage of the opportunities to drive innovation, inbound investment, job creation, and unlocking access to financial services. I think it's fascinating to see kind of the early thinking that leads to the market implementations. And I guess, so one of the questions I had, so you're mostly working with the regulators as they're looking to see the best practice and work out what's the right model for them. Are you seeing the global economy or global geopolitical environment is interesting at the moment? Are you seeing increased momentum and wanting to drive open finance? And
I don't see caution at all. I mean, it seems to me that this is it's almost, it felt to me at sometimes almost like a kind of a tipping point, that once so many people have done it, then you can't not do it, because there's quite a lot of work going on, some of it under the Bank of International Settlements for cross-border application, particularly cross-border payments, and BIS, a couple of projects like Alberta, which chime with that. So once you have that cross-border impetus, then that's going to drive the countries who aren't particularly up to speed to get up to speed, because there are big advantages for them in doing that. But no, I've seen absolutely no fall off in the momentum. If anything, it's been growing. Things are speeding up, both in terms of the number of countries looking at adoption and in the scope of the ecosystems. And you're starting to see now, like I mentioned, the survey we did in November last year, published in November last year. There were maybe a dozen countries that have gone beyond open banking into open finance, and maybe half a dozen or 5 or so who've gone beyond open finance into open other stuff, typically energy, maybe telecoms as well. And I think that's what you're starting to see now, that there's almost a kind of an evolution of the ecosystem, that when a regulator says, well, hey, look, these same principles could apply in other markets. There's nothing different here. When we built the plumbing, all the wiring, it's all installed. Maybe you could just get a different information payload going down those pipes. And yeah, we see benefits there, particularly for growth in the economy. And the Australian Productivity Commission earlier this week, or maybe late last week, published its interim report. And that's saying that, yeah, data sharing ecosystems could add 10 billion Oz dollars to the economy, annual value of the economy. And that's what a lot of governments are looking for. So they see increasingly, they're seeing data sharing in a more general context as being advantageous to growth. And that's what everybody's looking for. So I don't see any tailing off here. If anything, the number of countries will continue to grow who are doing it, and the scope of the ecosystems they're constructing will continue to grow.
Yeah, I agree with that. If we look at some of the recent markets like the UAE, where there's a really ambitious open finance agenda. Obviously, in Australia, we're moving beyond banking through CDR. And I agree with you. We're seeing markets looking to move faster and with broader scope. And interesting, one of the things that we've seen, I think markets and regulators are much more clearly defining why they're doing it, clearly defined objectives around, as you say, driving innovation, economic growth, direct impact on GDP, investment, job creation, as well as the foundations for things like tackling financial inclusion. So kind of going backwards a little bit, I mean, you started the journey in the UK. How do you think the UK is doing that? Because we're seeing this increased momentum in other markets. Kind of where we are now, is it where you expected it to be? A little bit ahead, a little bit behind? What's your scorecard?
It's difficult because it's not as if the UK has been proceeding at a steady pace in a steady direction. It's been kind of jerky, I think. That's the fail. It's not altogether clear. And we had a world pandemic, for goodness sake, in 2019, 2020, just when all this was kicking off. And I remember having to slow down some of the requirements on the banks because of COVID in the tail end of the implementation. Isn't where I expected it to be. I remember Mark Carney, when he was the governor of the Bank of England at the time we were doing all this, he said two things which I remember very well. One was that open banking was about competition, and the competition was not an enemy of financial stability, which I think some central banks may have got wrong end of the stick about. But he also said wisely, and it'll take a long time to happen for the benefits to flow through. And I think it's that stuck with me. But yes, this partly because of the incentives of the players involved. So the design of the open banking implementation, it's not just like solving a crossword puzzle. It's not a purely intellectual exercise. You have to recognize that most of the banks in the UK saw it as a threat rather than an opportunity. And it was very much in the compliance bucket rather than the how can we make a ton even more money than they make now? How can we make a ton more money than with open banking? So there was pressure, for example, on variable recurring payments. There was nothing in the CMA report which said that the sweeping use case was the only use case that we intended BRP to be used for. It was interpreted that way by the banks. So you've had foot dragging, I think to put it mildly, on other applications. So that was disappointing. So I think some things have moved a little bit slower than I'd hoped they would, partly because the fact is that in some cases you had to create the market before the products could be created. So nobody really understood data sharing. You didn't do it before. You had to kind of sell the concept to people. And then companies and PFM applications came in and said, well, this is what you can use it for. These are the benefits. But people didn't know about that. They knew about payments. Everybody knows what a payment is. Do that. But on the data sharing side, that it's taken a while for people to get used to that idea, as Mark Carney wisely predicted it would. But yeah, I think it's getting there now. I think it has speeded up a little bit now. So valuable work is going on. And the analogy I always used, I always hoped would be the case, that it's a bit like teaching your kids to ride a bicycle. You put stabilizers on to start with, the first phase. And then there comes a point when you can take the stabilizers off and they go off under their own momentum. I think we're starting to get to that point now. I don't think we're quite there. I think if some of the big techs stepped in and put their bit more than the toe in the water, then things would speed up. But I think it's encouraging. I wish it had gone faster. It hasn't, but danger other people will overtake us now. That where the UK had a technology lead, others may beat us to the punch.
I think that is a genuine risk now, right? There are other markets that have been moving faster, and as you said, with a broader scope as well. I think there's a great opportunity for the UK to build on. There's incredible foundations that have been put in place, and they're working really well. But to extend to a broader smart data scope, I think will unlock a huge amount of economic value for the UK. One thing I wanted to actually touch on there. So you talked about the incentives. The US is in a really interesting position at the moment. So we've got, I don't know, this is potentially a big topic, but we've obviously got a bit of a soap opera going on with a bit of a regulatory vacuum as the CFPB has been going through some significant change. 1033 has less of a certain path than it previously did since the change of administration. There's been talk of removing it. There's been talk of rewriting it. We're in a position at the moment where then there's some significant market movements with JP Morgan, for example, talking about introducing fees. If you believe some of the commentary, quite large fees for data access. What are your thoughts on the situation? What do you think needs to happen?
I think they basically need to get on with that. But I hesitate to predict what's going to happen in America at the moment. I was in touch with people while the Doge action was taking place, and some good people got laid off by email, which is a shame. I don't know. I mean, I would have thought that it would be in the bank's interests, the US bank's interests, not to throttle this, throttle the industry before it gets going. But I would have thought their shareholders would be, if I was a shareholder, I'd be a little concerned that if they were seeing it as a threat rather than an opportunity in the American context, because it's a more competitive market there. And it's safer legally from their point of view to be using APIs rather than screen scraping. And the thing you really want to avoid is, one of the problems I've had in Australia is that because screen scraping's continued, it's permitted, then a lot of apps, mortgage application apps are still using screen scraping. And really, that's not the best move from the bank's point of view. So even from their own interests, I think they should stop and think about what they're doing. Maybe follow the lead of what's happening in New Zealand, where the banks have all said now, the big banks in New Zealand have all just said they're not going to be charging TPPs for data access, at least in the short term, because they want to get them off screen scraping.
Yeah, it's really interesting to see it play out. I mean, I have been a banker most of my career before moving into the open banking space. I have a strong view that actually really good open APIs should be a driver of the business model for the bank. There'll be premium capabilities you can expose to drive new revenues, APIs that enable experiences to be embedded with third parties to help grow the normal banking business, and the stuff that is frankly just a data right and is a hygiene factor to drive innovation in the industry. And the US is interesting because there was already a significant move towards standards-based APIs rather than screen scraping. But yeah, it feels an important moment at the moment. So be interesting to see how it plays out. I guess one final question though, if I may, going back to the role at Cambridge and the discussions you're having with the various regulators around the world. What's the kind of one or few bits of advice that you would give to the regulators? I'm sure you do on the course. What are the key things, do you think?
I think, as I said earlier on, there's no right answer. This is certainly not sort of imperialism as applied to open banking. Say, what you need to follow the UK model because it doesn't work for everybody. You need to build on the foundations you've already got, the legal foundations as well as the economic and technical foundations you've got. I think probably the biggest single lesson I've learned is, and it sounds simplistic when you say it, it's that a lot of regulators are adopting open banking because the market they're looking at is not well functioning. There's something wrong with it. And typically it's highly concentrated, switching rates are low, there's a lack of innovation. So the market's just not working well. And then you get the question from them, should this be a voluntary approach, by which they mean a market-led approach, rather than a mandated approach? And when you put it in those terms, the answer is kind of obvious, at least to begin with, which is, look, if you're doing this to make your market function better, don't think you can rely on market forces to fix it for you, because that's precisely the problem you're trying to solve. And that the banks in those circumstances will have the incentive and the ability to frustrate your efforts. So at least at the start, don't rely on market forces to determine, for example, what banks are going to charge TPPs, if anything, for access to the data they're holding on behalf of consumers, because the market won't fix it, because you've got a market problem. If you remember, that was the problem you're trying to fix in the first place. And it might change. If the policy works, if the implementation has the effect you want it to have, then you can take the brakes off later on, lighter touch, rely more on market forces. And also think about, if you're moving from open banking to open finance, just think, well, not all markets are the same. So if I'm extending beyond banking, which I think is non-competitive, to general insurance, say, which is competitive, then you might want to adopt a different approach. You might want to say, well, we can use a market-led approach in insurance, but not in retail banking, because it's highly concentrated and switching rates are low. So that's probably the biggest single bit of advice that we give people on the course. It's do it your own way, don't copy anybody else. Steal good ideas if you see them, share knowledge, that's all great. Don't feel obliged to, there's no blueprint for this. You make it up yourself to suit your own circumstances, but do think about why you're doing it, what the problem is that you're trying to fix, and whether that affects the way you do it.
I think that's an incredible statement to close on, the importance of getting the objectives and the problem statement right at the outset. Bill, thank you. This has been an absolutely fascinating discussion. So a huge thank you, and look forward to seeing kind of what the next cohort of the program brings. So yeah, thank you for joining us, Bill.
My pleasure. Thank you. Thanks you.